before the show even, you talked about getting, you know, $1 million in funding at Apex. You weren't messing around when it came to the challenges. You were like, I'm in, I'm out. I want to pass that challenge and just get to the funded stage. How did you use the risk to reward in your current strategy and approach to be able to achieve those evaluation passes?
So basically, like, I fall in, there's two categories, right? Like,
Yeah. Let's hope he can get that
all right,
fridge
hold
in.
on.
All right, folks, here we are on Trading Up. We've got a familiar face in the house. If you are a fan of the channel, we've got Blake Robinson back on the show 2 years on from him being a 700K funded trader. We're going to see what his journey has transitioned into. I know he's going from strength to strength. So, Blake, welcome to the show.
Hey, Cam, how's it going, man? Happy to be back. It's like you said, it's been a long time. So
Yeah, look, I want to hear what's been happening, because when we last had you on, for those that haven't seen the interview, Blake was working a full-time job, and he was, as I said, 700K funded. Then the whole prop firm thing sort of went down with the MT5 being pulled out from underneath everyone, and everything sort of ensued from there. But before we dive into where he's at now, we're going to find out how he became so profitable and such a good trader. So to start off with, what were some of the key things that helped you overcome that hurdle between, you know, struggling or beginning and then becoming profitable?
yeah, so I'd say like at the very beginning, like when I really started to kind of see a transition from like being unprofitable to profitable, I would say, you know, religious backtesting, right? Really having a very great, just like a very great just like belief in my skill sets and my system that I was trading. So I think a lot of times when traders push the button, right, like on a trade, maybe they're not fully sold on what's going on, or maybe they haven't back tested enough to really see that same scenario that they're playing out over and over again, right? Being able to come on to or look at a trade setup that you know is your bread and butter trade, to kind of have those A, B, and C setups marked out. I'd say other things too, really just, you know, really diving into the emotional side and psychology side of trading, right? So understanding like, you know, I think my whole side of trading when it deals to the emotional side and psychological side changed. The whole mentality towards that changed when I understood the concept of amygdala jacking. And I don't know if you've ever heard of that, but basically, when you trade, right, a lot of times what happens is your emotional side of your brain kicks in. Your amygdala controls a lot of the emotion in your brain. It controls a lot of the kind of like rash decisions that you do. And so like usually your frontal cortex, you ever hear about people say like, oh, your frontal cortex is the part of your brain that controls decisions. It's not fully developed until you're 24 or whatever. When you're in stressful situations like trading, it could be life or death situations outside of that, like actual like stressful situations. What happens to your brain is your amygdala kicks in and your frontal cortex turns off. And so you ever like looked at a trading scenario and be like, why did I do this? Or like, why did I do something stupid after the fact? And so, you know, when I learned about that concept, it's basically called amygdala jacking. And so when I learned that, I realized that, you know, a good psychology strategy basically puts you in the driver's seat of making sure that you don't get to that place of doing dumb decisions by not putting yourself in very over stressful situations when you're trading, over leveraging, right? Like all the same stuff that you talk about. But once you learn that like it's something that you can't really beat, you just have to game plan to not get to that point. It kind of makes you kind of re-examine your whole psychology in terms of like, you know, how I'm trading, or like, you know, and making sure that I don't get to the point where I just start, you know, reacting to the markets because I'm in crazy drawdown or that type of thing. So I think that also helped. And then just honestly turning off a lot of the social media traders, right? Stop trying to keep up with what you see other people are doing and just kind of run your own race in terms of your own account size and things like that. I think they're probably like the biggest things that like really kind of made me profitable, I guess, in a sense.
And so where did you find out about this amygdala hijacking? Can't even say the
Yeah,
word.
so it's
You've probably heard me talking about trading with confidence, and honestly, it's a lot easier when you're not risking your own money. That's why I wanted to mention Blue Guardian. They offer instant funding or a challenge to get you started, and up to 400K in funding, weekly payouts, and a 90% profit split, and they've already paid out over 15 million to traders around the world. Plus, they're sponsoring Birmingham City FC and Chris Eubank Jr., so you know they're serious about backing performance. Check them out at blueguardian.com or check the link in the description.
if you look, honestly, I can't remember what his name is, but there's a good psychologist that he started out working with. He was a former golfer, and he wanted to qualify for like the PGA Tour, and basically he would like enter these tournaments, these like qualifying tournaments, and he would like do something stupid, like basically the same thing, you know, in the trading scenario, but in his world of golf, like he would like overdrive, or he tried to be too aggressive on his putts or something like that. And so he got a degree in psychology because he's like, I keep doing these dumb things. What's going on? And then he started working with poker players, and then he ended up starting working with traders, because the world of, you know, trading and poker, like very similar. It's gambling, right? And so like, why do traders and gamblers do the same stuff? And so I can't remember what his name is off the top of my head, but he had a book that I read, and it kind of just changed the way that I like approached, because a lot of times like we'll do something stupid on the charts, or we'll overtrade, over leverage, etc. Right? And we'll have a loss maybe that's bigger than we should, and we'll walk away from that scenario. We'll say like, I just won't do that again, or I can't do that again, right? But like, if you know that your brain is pre-wired to do this, then you know that once the heat turns up, you know, like to a 9 or a 10 in your charts, then it's, you know, you start to learn that this is something that's unavoidable. And the only way I avoid it is by not putting myself in that scenario to begin with. Because once I'm there, I'm reacting. And a lot of times you have bad habits that are formed, because a lot of times you'll lose money, you'll see red, you'll over leverage. And then that 1 out of 10 times you'll win. Right. And then you're like, oh, okay, cool, I'm good. Everything won. I ended my day green. And that's all that matters. But then obviously it's going to come back to bite you at some point, where you're going to do that same thing and lose a lot. So, yeah, I read that book. That changed my whole perception when it came to trading. And so, especially from the psychology standpoint. So I went through this journey of like mapping out my emotions, really getting a better understanding of like what emotionally is causing me to get to these certain places, and basically creating a whole like a map of that stuff. So like when I'm in trading outside of my whole strategy, I'm looking at that and I'm evaluating myself. You know, not just the charts, but I'm also evaluating, kind of reading my own emotions and mental state while I'm trading, so I can avoid even getting to that. Maybe if that 10, you know, if 1 is I'm in a good place mentally and like emotionally while I'm trading, and 10 is like I just see red and I'm just pushing the button, reacting, trying to get money back or trying to win, that when I get to a 5 or 6, then I start to know those things, and kind of, you know, say, okay, this is my sign to close the laptop. Okay, maybe I'm done for the day or whatever. So once I started realizing those things, I think that really it started to improve my C game, and let me focus on my A game, which is really just, you know, making sure my strategy's locked in and I'm looking for like those A+ setups.
Okay, so you had like some kind of scoring system, and can you talk us through that in detail? Like, did you write that down on a pad, or was it in a spreadsheet?
Yeah, so I actually have a bunch of Google Docs and spreadsheets that basically just map out my emotions when I'm trading. So like obviously the big things that everybody struggles with is like overconfidence, maybe fear, greed, you know, all this type of stuff that we talk about. But what does like fear look like from, you know, for you on a 1 to 5, right? Like if 5 is like, I'm too scared to push the button, and I'm thinking about every bad trade that I've ever taken in my life and why this won't work for me. And 1 is like, I'm confident and I can execute the way that I want to, right? Mapping out like what that looks like from 1 to 5, like what emotions are kind of falling in line with that. And so that way, like I'm taking constant inventory while I'm trading. So like if I'm in a position and I'm like, man, I'm really scared, like this is my 3rd loss in a row this month or this whatever, like I'm mapping that out and kind of taking inventory, saying, okay, you're at a 3, like what's going on here? Should you even be trying to take this trade? Or like overconfidence, right? Because that's another one. You're coming off a win streak and like you won 10 trades in a row and you feel like, man, I own the markets, I know everything, right? And so that usually causes you to over leverage, right? And it tends to put you in a position where, you know, that 1 loss could take away, you know, more than you want to lose, right? So kind of taking inventory before the trades, like while I'm in the trades, and then after the trades. Like if it's a losing trade, you know, taking inventory and saying, okay, what's that feeling you feel right now? Like I need to get my money back. Right? Like, is it okay to close the laptop? It's not okay to close the laptop. I got to stay, you know, play the game until I win. So like basically mapping out all of those things on spreadsheets, and I actually reference them before I trade. So like every time before I go into the markets, I'm like kind of taking inventory of where I'm at emotionally and psychologically while I'm in the trade. And then after I kind of, you know, do my journaling and kind of do that. So I think most of trading is, and I saw Jay Cap talk about this same thing not too long ago, but he said you pretty much can win with any strategy you know, it doesn't matter like what strategy you take. You can, as long as you know your system in and out and you know what causes you to get in on the market, you can be profitable, right? You know, I'm sure like we trade totally different, you and me, I'm sure. And so like, you know, we all see the market a little bit differently, but if you don't have a good inventory on your emotional side, it doesn't really matter, because you're gonna, you know, at some point it's gonna blow up on you if you don't understand that. So I think that changed the game for me entirely, I'd say. But just understanding that.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Cool. So what about backtesting? So I know you're extremely passionate when you started. Can you talk us through that whole backtesting journey?
Yeah, so I would say like when I first started trading, if I go back to like 2015, right? Like I'm a senior in college at this point. And honestly, I've had like several iterations of this. So like for me, it's just, you know, I think about sports a lot, and trading sports are kind of like synonymous to me because they're high pressure situations. And so if you think about, it doesn't matter if you play, you know, football, basketball, whatever, soccer. I guess is it soccer over there?
Soccer, yeah. Sorry, it's football, really, but they do say soccer sometimes.
Yeah. Okay. Well, like whatever sport you're playing, like, right, like in order to execute, right, you have to go through that practice. You have to go through, you know, the mental visualizations a lot of athletes do, but you have to execute that same jump shot or you know, score or pass or whatever, like a million times over and over again until you can do it in your sleep. And so trading is kind of the same way. Like if me getting into a position is like taking a jump shot, right? Like I want to know that when I push the button, I have a lot of confidence in the fact that I've taken this trade, you know, in my head or back tested a million times, and I know the probabilities of it playing out versus it not playing out. And so back testing, when I first started, there was months, and like there was like months of me wrapping up at Michigan State where I went to school, where I would sit in a dorm room after hours, or I would sit there and like replay, like in a month's time, or I'm sorry, in like a night's time, I would go back through like 2 months worth of chart data and just look at, you know, trade every London session, right? And make notes on like when my system worked, when it didn't work. There was a whole weekend. It was probably like a good 2 years of my life from like 2015 to 2017 where I didn't even talk to people like that. Like my friends would be like, "What are you doing on the weekends?" I'm like, "I'm back testing." But I think, and there were several iterations of that as my style kind of evolved and changed. But I think just knowing that you have the confidence to go into the markets and say, okay, I've seen this setup a million times. I know what it's probably going to do in this situation. Obviously, you don't know for certain, but you know, basically, if you play the probability, it's like it has this percentage of a chance, and so it just makes you more confident when you push the button. And then it also kind of ties into the other parts too, like that emotional and the psychology side too, like knowing that, man, if this is my A+ setup, this is my bread and butter, that when I take this, it's going to have this chance of playing out. Or maybe this setup that I'm looking at isn't going to be as successful statistically. So like maybe let me dial it back and not risk as much, right? And so I think just if you haven't back tested, I mean, it's basically just practicing, right? So if you haven't practiced, how are you going to be great?
Yeah, exactly. Now, what gave you that drive and motivation back then? You know, university, you'd think everyone's going to have, you know, be partying at the weekends, and when they got spare time, what was different for you?
I think for me, it's always been like, I'm a delayed gratification person. Like anybody in my life will tell you this, that like I have no issue putting aside the stuff that I want to do or the fun stuff for like work, right? Or stuff that I think is going to be, you know, fruitful in the future, right? So it's just, you know, I had no issue doing that. And then on top of that too, I think you get to the end of, you know, like college or university, right? And you're figuring out what comes next, and you see everybody kind of like getting a job, right? And at that time, I thought I was going to be I was going to go straight from undergrad to doing this, right? And doing that full time. And, you know, you want to be able to do something that's cool, entrepreneurial, right? And for me, I think it's just, that's always kind of been a drive, is like, I love entrepreneurship. I love the idea of me being able to sit down and create money or make money from something that like I didn't have to go to work for, right? I think that's always been the drive for me. And just I would say like when you're rewarded for your efforts versus just clocking in, clocking out, I think that's always been something that like, is fun. So.
Cool. Now, let's dive into this journey from 2 years ago to now. So, like, there's a lot has changed in the trading landscape. As we talked about the prop firms losing MT5 and futures becoming, I suppose, more of an option for especially the guys in the US like yourself. Can you talk us through how it all unfolded from your 700K in funding?
Yeah. So 750K in Forex funding, which was, it was with a few different firms that like well-known firms on that side. And basically the whole MetaTrader 5 fiasco happened, or MetaTrader 4 or 5 fiasco happened where and I still don't 100% know what happened with that because everybody had conflicting stories, but I know they revoked their license from some of the prop firms, but then they kept them, at least in the US. Like on the US side, they got rid of a lot of them, but then globally, some of them are still there. And that whole process, I lost a lot of funding through that. During that time, a lot of people shifted to futures. And so that I did the same thing. And so I, went with all the top futures firms, Apex, Top Step, I funded futures. And so got funded with them. I ended up getting maxed out with Apex, 20 of those accounts, which took me a long time. It took me about 6 months to put them all together. About from March of like 2024 to 2023, 2024 to September. And so it was 20 of those accounts. And then Apex as well, Top Step as well. And so there was a huge journey with that. Got some payouts through that, but then it started getting denials from some, and it just kind of turned me off to the whole process in general. And I figured that it would just been better to do my own thing.
That's kind of interesting.
Yeah, to be honest, like I said, being able to build your own account and transition away from the futures or the prop firm side of things, it's definitely a blessing and a curse. And I think like I think prop firms are a really good resource to once you get started and you're learning how to trade. It's an environment where it's low stakes, obviously high reward. But being able to build your own personal account is, it does a couple of things. It stops you from thinking as the payout as the final goal. And then obviously just being able to grow an account. Each individual win, obviously you can pay yourself. So, I think there's definitely, once you cut your teeth in the prop firm space, definitely transitioning to your own account. And for me personally, at some point, I want to be able to transition and trade for a fund. And, being able to show a track record using your own capital is something that I think is really important. So,
hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
Cool. So now that you're trading for yourself, you're working as well. Can you talk us through your trading week? How does that look? And the markets you trade, that kind of thing?
Yeah. So my trading week is depending on the week, I'm only really trading 3 days in the market. And so every once in a while there's an exception there, but usually Tuesday through Thursday are going to be my main trading days. Usually what happens, it doesn't really matter what market it is, but usually what happens is, Tuesday through Thursday are going to be the days where the trend is going to usually follow in the direction of that weekly bias. And so if you have your Mondays and Fridays are usually going to be counter trend days, again, depending on the given week. And because, for me, my strategy kind of revolves around being able to get the biggest chunk of the weekly range. And so once you identify that, usually on those given days, that Tuesday through Thursday is when that market is going to start really trending in the direction. And so I really have it narrowed down to about 3 days a week. I'm looking for maybe 1 to 2 good setups out of those 3 days. And then outside of that, I'm pretty much at work. So my trading days individually are structured where I am, on the charts from, about that morning session. So I trade New York session mostly, indices and futures, or indices and currencies. And so in that market, I'm usually online from about 7 to noon. And then I spend the rest of the day doing, working on other projects, whether I'm, it's my actual job or other stuff as well.
So have you transitioned fully away from futures now?
Transition from futures,
so
or transition from
away from trading futures?
No, so I'm still actually trading. I'm trading futures mostly, or I transitioned away from trading currencies and trading Forex. I really haven't touched Forex specifically in a couple of years, but I have my personal futures account. And so in that I trade currency futures. So I still trade some of those assets like the euro, the pound, etc. But I'm just doing it through the futures platform, in addition to like NASDAQ and ES and things like that.
So what are you doing? Are you going through your basket of markets and finding where the setups are most likely going to come next?
Yeah. So basically everything for me kind of starts with honestly those weekly calls that I do on Saturdays. And so basically that is kind of like my dedicated time when the markets are closed, to be able to see like what happened last week, what I think is going to happen this week. And it sets up, the overarching idea for like, what markets are going to be the best to trade, whether it's euro or whether it's NASDAQ or gold even, right? Like whatever currency or indice market that I'm looking to trade for that week, those calls are usually, the place where I do that. Shameless plug. But once I get those and narrowed down, I'm heading into the market and I'm saying, okay, cool. I have like maybe 1 or 2, 3 ideas for the week. And then I'm focusing on those throughout the week. And so, when I actually get to those individual sessions, I have an idea of what I want to see happen based on that bias and based on like what I think is going to happen for the session. And I'm just kind of reacting off that. So I might have, maybe 6 or 7 instruments that I'm watching throughout, through the entirety of my trading. But then when I actually get down to the sessions where I'm trading, it's probably just like 1 to 2, to be honest.
Okay. And so for folks that don't know, so Blake's on Trading Nut every week in the weekend, breaking down the market. So if you want to get his view on like what's potentially going to happen for the next week, then go and check it out. Just hit subscribe and you should get access to that coming up. Now, you mentioned obviously the markets. What about the time frame? So how are you using time frames to get into a trade across the week?
Yes. So that's something that I would say, depending on the market. So basically, I see timeframes as two different kind of windows. And so for my currencies, I'm usually online from about 7 to noon. That window is where I'm looking for entries, and my my indices on the other hand, I'm looking for 9:30 to noon. Usually the market open in the US is going to be Eastern Standard Time, is when that market's going to really start to go crazy with an injection of volatility. So usually during that window is when I'm looking for, my setups, and obviously again, in alignment with whatever the weekly bias is that I'm calling out beforehand or come into the market with beforehand. So obviously there's some overlap there. So there's maybe a 3-hour window where I'm looking at both markets, both indices and indices and currencies. But for the most part, I'm online usually about 7 a.m. Eastern Standard Time to about noon, looking at both of those.
And so you entering on a 5-minute chart, 1-minute chart, what are we looking at here?
Yeah. So it usually, when it comes to currencies, my entries are going to be based on around the 5-minute, 3-minute time frame. Sometimes I get as high as the 15-minute. Very rarely I'll see a 1-hour setup. Indices, it's a little bit different. So everything is really based around the 5 or 15-minute. It's a bigger time frame. A lot of times, what happens, and I'm not opposed to taking 1-minute entries on the indices. It's a bigger market. You can cut, a nice, usually have a frame out a really good risk to reward ratio on those smaller time frames. But sometimes you get caught up in noise, and sometimes you get caught up in these really massive pullbacks like that happen on NASDAQ or ES, where, you might have the overall like bias for the day correct, and your trade setup might be good, but it just wicks, right? Like, there's heavy wicks on NASDAQ. And so just jumping up a time frame for my entries kind of really avoids a lot of that noise. Obviously you have to take smaller position sizes, right? Because you're trading on a higher time frame. But I would say those are usually the time frames that I'm playing around with, 3, 5 minute, maybe 10 minutes.
And how do you make a call on that? Because I think, a novice trader is going to be like, well, how does he work out which time frame to use?
Yeah, so it's really about framing the setup. So for me, if I see my set, like the setup that I'm looking for is pretty standard across any time frame. And so there's like a checklist of things that I'm looking to see to happen. And so when I see those things play out in alignment with my overall, again, daily bias, session bias, like with the weekly bias, um, I'm okay to usually enter on that, like whatever time frame I'm seeing it on. And sometimes you're gonna have like time frame correlation, which means it's just the same setup is gonna show up on multiple time frames. And so usually that's what happens. And I just kind of frame things around the higher one because I can put my stops in a in a better place, that might allow for all of those setups to be respected, if that makes sense.
And what about risk to reward? You mentioned it before. What are you looking for? Is it fixed or floating?
Yeah, so my risk to reward is really ideally I want to see 1 to 2 at minimum, usually 1 to 2, 1 to 3. But again, a lot of that is based around like where the liquidity is resting. So like if I'm taking a trade and and I see maybe it's not quite a 1 to 2, or maybe it's even less than that. Maybe it's like a 1 to 1.5 or something like that. If I can frame out a really good, draw on liquidity for either that session, that's usually going to be something that I'm willing to take the trade on. Ideally, I want to see something positive though, like 1 to 2 is ideal.
So you talked about like before the show, even you talked about getting $1 million in funding at Apex, and you weren't messing around when it came to the challenges. You were like, I'm in, I'm out. I want to pass that challenge and just get to the funded stage. How did you use the risk to reward in your current strategy and approach to be able to achieve those evaluation passes?
So basically, when it comes to passing challenges, there's like really 2 big trains of thoughts, right? The first one is like, treat this like a real account, right? And then, take your time, however long it takes you to pass that challenge, take it and do that. The second one is really be more aggressive with these challenges, right? Kind of, especially in the future side of things, there's like 1 day, 1 pass. You can really just like pass them in 1 day. And so basically, I'm kind of like a combination of those 2 things. So I think you really need to be able to have a transparent conversation with yourself around like when you get funded, right? Like, are you able to manage your account with risk, right? If you're being more aggressive, right, in almost, I don't want to say gambling, but you're being more aggressive in less risk adverse, you have to know that when you get that funded account, you can actually trade it, right? Because it doesn't mean anything to pass a challenge. It means if you can get payouts. And so if you know that you have a really good risk strategy in place and that you can really, when you get a funded account, you can manage that risk, you have a solid strategy, and you know that you can get to payouts, then, be more aggressive in the challenges, save some time. But if not, obviously take each challenge as an opportunity to really build your skill set and really put yourself in position to really hone in and take your time to pass.
And so what was your exact approach to this? Like, so how did you go about it?
Yeah, so I was more aggressive because, again, I know that like when I have a challenge or when I have a funded account that I'm going to be able to, again, apply the appropriate risk, right? And so for me, challenges are just the way to get, just a block in my path to get to the funded stage. So I was really more looking at the capital, and I knew like once I had that, then I'm able to employ really good risk strategy and risk, measures there. So I'm very aggressive. So I would say, looking for opportunities like really big risk to reward, like 1 to 3s, 1 to 4s, things that I can, I don't want to say over leverage, but apply more leverage than I would in a like actual funded stage or with my own personal account.
So maybe 2 weeks, maybe 3 weeks. That's how you get there. Hey, look, Blake, it's been fantastic having you on. And folks, as I mentioned before, if you do want to catch this guy's weekly updates live, they're here on the Trading Nut channel. So on the live streams, you'll see them pop up every week. It's in the weekend, so go and check them out. But what are some other ways that folks can find out more about you?
Yeah. You can definitely follow me at Brinks Trades on social media. Obviously, you can go to talentedtenntrading.com. That's my community. There's a webpage that'll take you to my Discord community where it's free to join, but really just kind of stay locked in with me. I offer a lot of nuggets, a lot of trading advice to people. In addition to kind of follow up with those weekly projections that I do, just Obviously, you know, when I do those projections, it's on Saturday when the market's closed. Obviously, things change between Saturday market close and Monday market open. So a lot of times I'll give out, you know, more nuggets as far as like what I see, you know, in the markets there, but then also have a more extensive, you know, community where I actively teach my strategy and kind of how to deal with all those things that I talked about, the risk management piece, the, you know, the strategy piece, and really just kind of shape, you know, of the next generation of traders. So.
Awesome. Well, look, fantastic for getting you back on the show, Blake. And I'm sure we'll do this in a couple of years' time and see where you're at in the future. And we might be lucky enough to get him to do a bit of a chart breakdown for us as well. So stay tuned for that. Whilst you're there, folks, hit subscribe, like, and that notifications bell. And we'll see you in the next one.